Hi, you're watching Investor Insights, and in this video I want to bag financial writers and commentators. I read an article just this morning about the plight of the Aussie dollar. Now, this journalist said that the pros think that there's another 20% downside on the Aussie dollar from its levels of 90 cents to the US dollar. And you know what the irony is? This same journalist wrote only five months ago that the Aussie dollar could trade as high as $1.15 by the end of the year. Now, what's going on? How do you go from having a forecast of $1.15 by the end of the year, that's 4 months' time, to now expecting 20% downside on 90 cents, that's what we'll say 72 cents. Gosh, if a company's CFO came out and gave outlooks like that, man, the stock market would beat the stock to hell and back. I mean, how wide a range are you going to give? $1.15 through 72. What this shows is that these financial commentators or writers, journalists, whatever you want to call them, are a big bunch of idiotic lemmings. They see something, they write about it, and they exaggerate. So the stock market, the Aussie dollar may have been on a very flat trend for the past 3 years, always hovering above parity, and just because it spiked a little bit means that it's next heading towards $1.15, where it hasn't passed $1.08, $1.09 the past 3 years. And now that the Aussie dollar has collapsed on the downside down to 90 cents, in fact it's 88 cents today, the same journalist is writing that they're expecting 20% downside, which is down to about 72 cents. Wow. I can't believe how reactive that they are and how much they like to exaggerate, especially in their forecasts. So the lesson to be learned from this is that it doesn't matter if you're a trader or an investor. If you listen to financial journalists or analysts or writers, commentators, then you're a sucker. And odds are you're going to get crushed. Because those guys are merely reactive. They can't form an opinion of their own. They have to listen to everybody else and write about the same old junk that everybody else is dishing out. They only see very short-term patterns, and none of them have any understanding of the trading environment whatsoever. The people who make the most money are the people that are proactive, such as myself. You gotta form your thesis nice and early. You gotta have an understanding of everything that's going on in the financial world, and you gotta pick the perfect entry and exit points. You can't just say, oh, the Aussie dollar's gonna fall, and just talk about it. You've got to put where your mouth is. If you don't, it means you got no confidence in what you're talking about. And I think the biggest mistake that anybody's going to ever make in life is to be a lemming and copying those financial gurus, the commentators and the journalists. Because 99% of the time, they're wrong. And they're so wrong, they couldn't be any more wrong than they are. So don't follow their advice. form your own opinion, test your theories out on a pretend platform or a play platform, just to test things out, and then go out there and execute for real. And if you're wrong, well, cut your losses short and start again. But not under the advice of those lemmings.